There are forms of oppression and domination which become invisible, the new normal.
This is a hard one to answer, especially because history would suggest that it's going to be a shock that causes if a transition happens, it's going to be some kind of shock. And it's hard to predict what's going to be in the background to replace it. I mean, could some type of multi-currency system be set up and kind of waiting in the wings? It's a very, very difficult thing to predict. I think it's impossible to predict how this plays out, because usually the shock is an unexpected war. At least the last two were. Could be a natural disaster, another COVID that's worse, or major earthquake, volcanic eruption. Who knows? I mean, people laugh about that. Volcanic eruption in 1815 changed the world. So
there is a theme surrounding crypto adoption. It's not payments, it's about real-world assets, and the most notable asset class is treasuries. These use cases are intentional. The U.S. has been building up a massive deficit. When spending bills are passed, U.S. Treasuries are issued by the U.S. Treasury and sold into the open market. If there is a stimulative monetary policy, the Treasuries are bought by the Federal Reserve. If not, Treasuries are bought by the big banks and some of the other institutions that need to back collateral with safe haven assets. Well, with tokenized treasuries, fintechs, stablecoin providers will be a new source of demand for U.S. debt.
Project Guardian explores how blockchain technology can potentially revolutionize the process. To tap on the benefits of blockchain and smart contract, an open interoperable network was conceptualized to allow assets, such as cash or securities in traditional forms, to be tokenized. As part of the asset tokenization process, minted tokens are whitelisted and then held within their respective digital asset wallets. Verifiable credentials, or VCs, are issued by the respective trust anchors and held in the wallets of the liquidity provider, as well as those of traders, to authorize the use of funds held in respective digital asset wallets. In contrast against DeFi protocols in crypto space, where users are anonymous, VCs are required for any user to transact against the institutional-grade DeFi protocol to reinforce KYC and AML processes. Using tokenized assets, authorized liquidity providers can deposit assets into the pool based on the live price feed and the pool price. Authorized traders can key in the intended trade and get indicative pricing from the automated market maker. If the price is acceptable and within the market price threshold validation, the trader can proceed to enter trades against the pool. Atomic trading and settlement of tokenized assets enables greater efficiencies and transparency, as well as lower settlement risk. As one of the first of its kind to be developed on public blockchain, we continue to explore DeFi for traditional financial markets.
The Monetary Authority of Singapore is overseeing Project Guardian that is testing out various different open public blockchain networks. Now, it's important to note that this is an evolution and synthesis of different projects that the MAS has overseen. One of the first projects, Project Ubin, tested out the Ripple and Stellar blockchains for cross-border payments. Now they're testing out DeFi for traditional financial markets with DBS Bank, JP Morgan, as well as others. And in the DBS website and in this video, they showcase Polygon as one of the open protocols that they were testing. The more you dig into these central bank projects, the more you'll see a theme of private permission versions of EVM being at the heart of these systems.
Building and managing portfolios for clients is a $5.5 trillion business, enabling millions of investors to meet their financial goals. But existing technology and complex workflows make portfolio management challenging at scale. Even restricting access to high-performing alternative investments like private equity and private credit, which have historically outperformed public assets and reduced portfolio volatility. Enter tokenization and smart contracts, innovations that can revolutionize the asset and wealth management industry by streamlining workflows and automating portfolio management. Through Crescendo, a JP Morgan next-generation portfolio management proof of concept, portfolio managers and investors can access traditional and alternative assets. Take Ollie, an investor, and Kathy, his portfolio manager. Ollie wants his investments to reflect his risk appetite and his ESG values. With Crescendo, Kathy can quickly build an ESG-centric model defining sustainability-focused strategies and desired risk and return characteristics. Once she sets target allocations for each fund, Kathy publishes the new model portfolio on the Onyx Digital Assets blockchain network, ensuring transparency for Ollie and other investors. After speaking with Kathy about the investment opportunity, Ollie reviews the details, including asset allocations to the target funds, as well as the projected outcomes. When he's ready to invest, he transfers his dollar deposit tokens to Kathy, who instantly receives them. Now, all she has to do is activate Ollie's new investment. This is where the benefits of Crescendo come to life. What would normally take portfolio managers days of processing can now happen much faster thanks to tokenized assets and smart contracts. The trade execution process automatically kicks off, ensuring Ollie's investment dollars are allocated to the underlying assets of the model, using the exact proportions Kathy said. Crescendo can even enable investment in funds that are issued through existing systems and on different blockchain networks. And by leveraging novel blockchain interoperability solutions, it can programmatically orchestrate the investment and settlement process across multiple investors, multiple funds, and multiple blockchains, freeing Kathy from managing downstream complexities. Should Kathy decide to amend existing fund allocations based on insights from her AI assistant, or adjust a model to enhance its performance, she can quickly make those changes and update hundreds of portfolios at once, across blockchains and funds, in just a few clicks.
JP Morgan has had several projects in the blockchain arena, and they have rebranded several times. It started off with JPM Coin, and then turned into Onyx Digital Assets, and then has changed into Connexus. And there are other projects like the JPM Interbank Network, a link they call it, with two eyes. And Crescendo is kind of an amalgamation of different JPM initiatives like the JPM Coin and Onyx. At the center of this, Onyx is a permission version of Ethereum. And in the Crescendo demo, they talk about having Onyx as the base layer that speaks through layer 0 or Axelar to other blockchain networks and updates portfolios based on the requirements of the investor. And this is a very automated process. In the demo, you could see the Onyx platforming sending messages to different blockchain-based networks. Different networks are going to have different amounts of liquidity, different assets on their network. So this makes the most sense as sort of a strategic hub that sends messages into other ecosystems. And you'll see Axelar pop up quite a bit, and this is intentional. Because there's so many different banking projects, all with that common denominator, and we'll go through some of these banking projects and see some of the big guys that are involved with Axelar, but also Ripple is involved with Axelar, and Ripple was also part of the pilot for the Hong Kong Monetary Authority, but JP Morgan's Onyx Digital Asset lead spoke about the Monetary Authority of Singapore that tested Ripple and Stellar early on. And what he asked for is some type of standardization like ERC20, but for tokenized deposits. And an easy way to get around this is to allow the Monetary Authority of Singapore to allow fungibility between tokenized deposits and the actual Singaporean cash on the back end. And a central bank is able to allow those licenses to take place. So the JP Morgan executive was advocating for Partier or Ripple Labs to become one of the broker dealers for the Monetary Authority of Singapore.
New opportunities, convenience, security, and empowerment, a higher efficiency for business. For Hong Kongers like Ying, this is what the hypothetical digital Hong Kong dollar, or EHKD, may represent. A central bank digital currency, leading to accelerated and simplified traditional financial processes to speed up money flows with less resistance and cost, benefiting buyers, sellers, and the economy at large. Processes that take weeks of paperwork between third parties will be completed almost instantly in a few clicks. As part of the EHKD pilot program, Fubon Bank, Ripple, and partners have spent months developing a faster way to unlock home equity and turn it into credit through a home equity line of credit loan, or HELOC loan, dramatically shortening the application process. It starts in the Fubon Bank online portal. Ying sees his currently mortgaged properties, picks the one he wants additional credit on. Fubon Bank already pre-qualified the amount of equity Ying can realize based off the property value and criteria such as income, credit history, prepayment history, and other information. Ying reviews the offer and terms, then confirms. The bank's interest in the mortgaged property, the lien, is tokenized safely and transparently on the blockchain ledger. This token, once deposited in the lending protocol vault, activates Ying's ability to borrow. He just decides how much credit he wants, and in his vault dashboard, details around asset and liability update in real time.
Now, you may remember earlier in the year that Fubon Bank as well as Ripple came together for the Hong Kong Monetary Authority to create a home equity line of credit. And this was designed for users to borrow against their home and extract Hong Kong dollars from the real estate that they owned. You can see here that there is a bridge between the Ripple CBDC platform as well as the Ripple EVM sidechain. They're referring to the XRP Ledger sidechain with EVM compatibility. And it just so happens that Axelar was the ones that were under XLS 38 to grant interoperability between the EVM sidechain and the broader crypto ecosystem.
XRPL, Ripple obviously has a very unique edge when it comes to RWAs. And with Axelar, we're working with most of the RWA issuers as well. So it's not something I think we've done a deep dive yet with your team, but it's something we're prioritizing now and just bringing new RWAs over to XRPL. And I think you guys have a big edge there, and we can make it probably the biggest chain, right, for RWA adoption. So I think there's some interesting directions there.
So you kind of already answered the next question, which is what would you foresee as the evolution of the EVM sidechain? So I assume real-world asset tokenization is probably big.
Yeah, and I'm sure you have other plans, right, to make it like a general purpose chain and like have all kinds of applications. But I don't know, to me, it just makes sense to focus on one thing and do it really well. Obviously, a lot of people across the globe use Ripple for remittances. So it's, again, a natural evolution to just have all kinds of assets. Myself, personally, I use a lot of these RWA issuers, and there's not too many of them, right? I think until last year, we didn't even have tokenized treasuries on chain. But now if you know how to use crypto, it's very easy to just get access to treasury yields, which you'd have to go through hoops, they're not even available in a lot of parts of the world, right? So bringing those assets over, I think it's going to be super interesting.
So XLS 38 was a way for interoperability to occur using Axelar to provide interoperability between the XRP Ledger mainnet and the EVM sidechain of the XRP Ledger. A way to get around this could be Ripple's RLUSD. You see, RLUSD is centralized, and Ripple is the central issuer of the stablecoin. They can issue the token on the EVM sidechain, on the XRP mainnet, or on any other chain that they please. And exchanges can allow trading or withdrawals to take place using RLUSD on the EVM sidechain or the XRP mainnet. So interoperability can occur just with the stablecoin. It doesn't need Axelar to make this possible. However, I think the plans were to have Axelar as the interoperability overlay network because it taps into a larger ecosystem. As we mentioned in the last video, Ripple was partnered with MasterCard and some of the other larger banks, but so is Axelar.
You guys now are working on a EVM sidechain as well, right? Could you tell us more about that? Like, what's the motivation there? What's the purpose?
Yeah. So we are working on an EVM sidechain. So that'll stand, alongside XRP Ledger. XRP will be the native asset that will be bridged over via Axelar. So thanks for building a great product for that purpose. And back to what you said before about what if you want to customize in this way, the XRPL doesn't have pre-built into it. And so that's where the EVM sidechain comes in. But the way that we're thinking about it, at least from a Ripple perspective, this will be a public chain. Anyone can build on it, whatever and however they want to. But from a Ripple perspective, we're really trying to test the waters with Axelar, general message passing, and see how we can use the EVM sidechain as sort of a back end for XRPL mainnet applications. So we have a partner that's building a lending application, for example, where their contracts are on the EVM sidechain. But from a user perspective, we don't want to stop the momentum of a decade of users and liquidity building up on XRPL. So, this application, say I want to deposit it to the protocol, will be available from an XRPL mainnet wallet. And so the user's not even aware that their funds are being, siphoned over the EVM sidechain, and that's actually where the smart contracts are. And a lot of that is thanks to, Axelar technology and GMP. So I don't know if you want to give a little bit of context on what GMP is and how that works in case folks aren't familiar.
Jasmine discusses a common partner between Ripple as well as Axelar, and she talks about wanting to use the EVM sidechain for smart contracts while the front end is specifically for payments, and why choose one over the other when you can have both, and that's where Axelar came in. She also mentions GMP, which is General Messaging Protocol. And it turns out that, sure enough, Ripple is involved with Axelar's update to their tech stack called the Mobius update. I did some digging in trying to figure out who this partner was, and I've come to two different ideas, one being the root network, Fluffverse, and the other being MasterCard. Like I stated in the last video, MasterCard was part of Project Guardian, as well as a plethora of different central bank trials using blockchain and distributed ledger technology, but also Axelar and MasterCard have been working on the tokenization platform. MasterCard created the multi-token network that's enabled with Axelar technology. And their focus seems to be on bank deposits and real-world assets. Now, what we spoke about earlier with the GMP network, one of the first use cases were to the Polygon ecosystem. So circling right back to Project Guardian. Now, the banks have solutions that are multi-layered.
Look, the JPM coin, I think, actually, in many ways, has been great for the industry because, someone who not that long ago was saying Bitcoin's a fraud is now leaning in, and it was a macro good thing for the industry and bringing credibility. I'll give it a thumbs up. The JPM coin, though, if you really think about it, and there's a lot of banks represented in this room, is Wells Fargo going to use the JPM coin? Probably not. Is B of A going to use the JPM coin? Probably not. And so are we all going to have a Wells Fargo coin and a B of A coin? And now what about the interoperability between these coins? The other thing that makes no sense to me, in order to get a JPM coin, you deposit $1 in a JPM account. So it's 1-to-1 backed in dollars, and you can only use it intra JPM's ledger. Why didn't I just use $1? I actually don't understand what problem that was solving.
It's clear to me that stablecoins were never a priority of Ripple. So the leap into the stablecoin arena was intentional. And the reason why we're seeing a difference in the strategy, I believe, is because of interoperability between mainnet and the EVM sidechain. I meant to make this shorter, but I kept finding things, and there's still a lot more, believe it or not, that are connected to all these different central bank projects that I believe are of importance. So I will have to make part 3 of this video series. I hope you guys are enjoying. Please let me know if you think I've missed anything and that you would care for me to elaborate on. There was a post about MasterCard using the Zaman wallet, and that tweet, the author of that tweet has been removed from Twitter as of today. So that was something that I was trying to dig into. If you have backups of that tweet, please let me know. I will need it for my next video. Where there is power, there is resistance. Thanks, everyone. I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon or my ghost site, dmjr.ghost.io. Thanks, guys.